Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria. I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty, and on the different asset classes. Now, first of all, let us discuss what we have observed or what we have mentioned little 2 months earlier, and what Nifty is panning out now. I would like to just put to a notice or put to there's some lights that 2 months earlier we have mentioned in your video that Nifty has given a golden crossover where the long term moving averages, specifically 100-day moving averages, cuts 200-day moving averages from below, and that is the indication or that is a setup which indicates that it could start a mega bull rally. And we have given the heading in that particular video in our thumbnail also, that is this golden crossover indicating that it could be a start of a mega bull trend. So definitely now let us go to the Nifty daily charts and discuss that particular scenario which we have discussed 2 months earlier. Now let us see the Nifty daily charts. This is the Nifty daily charts. You will see on the screen now that on the Nifty daily charts, 2 months earlier, it was somewhere around here, and it was just near August or July end or August. We have discussed Nifty has shown the golden crossover. Now, we have mentioned that whenever, and we have given examples also in the recent, in the past. I mean to say, we have gone backwards 8 to 10 years, and we have seen or given example, or we have discussed the example. Whenever there is golden crossover, Nifty tends to rise or give returns of 50% from that particular level. So at those point of time, say for example near that particular golden crossover cut, Nifty was just quoting around 16,500. So after that, if we see a 50% rise from those particular area, then we might see adding on 8,000 points from 16,500. So that comes almost around 25,000 or 24,500 in the next 3 to 4 years. Now that was the rationale which we have discussed in that particular video. Now let us come to the current scenario. After that particular discussion, for the 2 months, the Nifty upward trajectory journey has been not smooth. It was highly volatile. We have seen huge swings, 1,000 to 1,500 points rally. Again, Nifty correcting 800, 900 points down. Again, rallying from the lower levels. This was the scenario because of the global uncertain geopolitics and the inflation which was haunting the global markets, specifically the European and the American markets, and that was replicating or that was impacting our Indian markets also. But what we have seen that Nifty has climbed all the walls of worry, and looking at to the Friday's close is just around 18,349, and Nifty is on the verge of a lifetime high breakout. The lifetime high was almost 18,605 to be precise. And once Nifty closes above those levels, then Nifty will enter into an unchartable trajectory or virgin levels, which has never come in the history of our Indian stock market. So maybe next week Nifty might cross its all-time high, and it is showing that the power of that particular golden crossover. So looking at this particular setup, and after Nifty closes about 18,605, we feel that in next 2 years Nifty might test the levels of 24,000 to 25,000, and above that we might see Nifty testing maybe 28,000 in next 4 years. Now, what is the uh, rationale behind Nifty testing 28,000? Is that simple? It is just a simple calculation. Nothing particular great about that calculation. Is that you have seen that this 18,604 was the high. Prior to that, Nifty has made this particular a flag pattern. You can see this is a pole, and this is a consolidation. This is a consolidation which we consider it as a flag pattern. Now, so once that is broken, then Nifty has potential to rally 10,000 points from the breakout of 18,604, which is almost coming around 18,000 to, sorry, 28,500 points in next 4 to 5 years. So most probably we will just have a view of next couple of years. And on conservative side, I would like to say to just discuss that if we even forget about 24,000 or 25, let us take a conservative target. So Nifty all-time high is 18,600. This is the swing low. This is called a valley. This is almost 15,000. So almost we might consider it 3,000 or 3,500 points. So just we will add on 3,500 points from above this particular 18,600. That would be coming around almost 22,000 points. I mean to say target in Nifty in next 1.5 years. So definitely Nifty is well poised for an upside rally. The setup is quite positive. The global geopolitics is also slowly and gradually cooling off. The crude oil prices are also cooling off, and dollar index. The most important thing is dollar index is cooling off. So dollar index cooling off is a great indication that the global markets might shoot up from these levels. So we might have a very good coming years, maybe 2 3 years for the stock markets. I know I'm not talking about just Indian but the global stock markets. So now let us discuss the important supports and resistance level for the Nifty for the next week. Important support in the Nifty in the next week is placed around 18,259 is the first support. Second support in the Nifty is placed around 18,028, and below that the third support is placed at 17,786. Whereas on the upside, the first resistance is placed around 18,500. Then second resistance is around 18,605, which is its lifetime high. And once it crosses above those levels, then the third resistance for Nifty is 18,781. So these are the important supports and resistance level in the Nifty. Looking at this particular pattern, we feel that any dips should be used as a buying opportunity. Now, friends, let us come to the Bank Nifty. Let us discuss the daily charts of the Bank Nifty. Now, this is the daily chart of the Bank Nifty. Now, we have seen that Bank Nifty is more stronger than Nifty. We have seen Bank Nifty has already crossed its lifetime high, and it has already closed above its lifetime high. It has already entered into an unchartable territory. So again, from these levels, Bank Nifty is also poised for you know a multi-year breakout, and it might take Bank Nifty higher from these levels. So again, in Bank Nifty also we have seen this was the golden crossover. So this golden crossover is also again indicating the start of a mega trend for next 3 4 5 years. So definitely, again, the overall primary trend seems to be positive in Bank Nifty. So for the next week, any dips should be used as a buying opportunity. And as we can see here, then Bank Nifty is also entering into this particular or unchartable territory, and Bank Nifty has again potential to test the levels of maybe 43,500 to almost 44,000, maybe next couple of months, maybe 1 or 2 months. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 41,918 is the first support. Second support in the Bank Nifty is around 41,603. Third support is around 41,051. These are the supports in the Bank Nifty. On the upside, the first resistance is around 42,345. If it breaks, second resistance is around 42,786, and third resistance is around 43,195. These are the important supports and resistance level in Bank Nifty. Strategy should be use any dips as a buying opportunity. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to study the data. I mean to say derivatives data, the calls and puts, open interest, implied volatility, option premium, volumes, and we'll try to figure out what could be the major supports and resistance level in Nifty as well as in the Bank Nifty. Now, first of all, let us discuss what we have observed in Nifty calls. In Nifty calls, you will see on the screen the action was seen in 18,400 calls, then 18,500 calls, 18,600 calls, and 18,700 calls. Now here you can see there has been rise in the volumes, rising open interest. Only in 18,700 we have seen some sort of shedding in this particular option. Might be, the call writers might be started taking out some profits because Nifty is going up. Now you can see here implied volatility is between 10.6 to 12.22. The percentage change in the option premiums is positive. Volumes are also good. Now here the major concentration of the volume is around uh, 18,600 marks. So at least for the next week, 18,600, sorry, and 18,500. So definitely for the next week, this could be the area 18,500 to 18,600 where Nifty might struggle a little bit. But once it crosses those levels, then maybe between 10 dips use as a buying opportunity. Now let us discuss what we have in Nifty puts. In Nifty puts, you will see on the screen the action was seen in 18,300 puts, 18,200 puts, 18,100 puts, 18,000 puts, and somewhat strong concentration around 17,900 puts also. Now here you can see rising volumes, rising open interest, implied volatility is in comfort zone between 10.47 to 13.43, but there has been a significant drop in option premium. Now, drop in option premium is clearly indicating that smart money has started writing strong Nifty out of the money puts, which is clearly indicating that Nifty, at least next week, Nifty will not or should not break 18,000 mark because there is a strong concentration around those particular 18,000 mark. Yes, prior to that also there is a concentration of around 12,000 volume in 18,200 18,200 puts, but most probably we feel that 18,000 would be difficult to breach because it is a psychological mark, and this was the area where Nifty has struggled to break out. Now after a comfortable it will become a strong support. So as I said, smart money has already started writing Nifty puts out of the money puts, which is clearly indicating that the trend is very strong, and we might not assume that it is a short rally from this particular area. Now let's discuss what we have observed in Bank Nifty calls. You see on the screen in Bank Nifty calls, the action was seen in you might see 40,500 and 40,500 calls. Now you can see here there has been rise in the volumes, again rise in the open interest. Impact volatility is between comfort. It is in the comfort zone between 13.99 to 14. There has been a rise in the option premium also, which clearly shows that the smart money might have built position uh, in out of the money calls, and which might indicate that closing levels because he already entered into an unchartable and unchartable territory, and it might give us a surprise of an upside sharp rally from these particular point. Now let us discuss what we have observed in Bank Nifty puts. See on the screen, In Bank Nifty puts, the action was seen in 41,000 puts, then 41,500 puts, and 41,000 puts. Now here you can see rising the open interest, rising the volumes, implied volatility is also rising. It is between 14.52 and 16.21. So this is the particular area where one should indicating that uh, we might see a sharp rally because already the smart money has started writing out of the money Bank Nifty puts. So from this particular levels, we feel that on the downside, 41,000 could act as a major support area, at least for the next week. And overall data analysis of Nifty calls and puts is clearly indicating that the primary trend is positive and any dips should be used as a buying opportunity. So overall, if we see that if we combine the analysis of charts patterns, Nifty, Bank Nifty, as well as the option analysis, trend seems to be positive. Strategy should be used to buy on dips uh, for the next week. Now let us come to the final point of our show, which is positional call. In positional call, I have identified one stock. The name of the stock is Poised. Now, this stock has been down significant lifetime high. It has support. It has been consolidating for last couple of weeks. Now you can see the stock has corrected sharply from the levels of 320, and it has almost corrected 50% from the high, or might be more than 50% from its lifetime high. Now here I will to your that now you can see after this particular sharp knockdown of the price, the stock has formed a little inverse head and shoulder. You can see this is left shoulder, this is head, and this is right shoulder. This is the blue horizontal line is the neckline. The volumes are rising on the right shoulder. The stock is on the verge of a breakout for long term, and we might see a trend reversal in Indian Energy Exchange. The stock has potential to rally from these levels in long run. Currently, the stock is on a verge of a breakout. Now, looking at this particular pattern, we feel that once stock breaks out, then we might see a trend reversal in the stock. So, long-term investors can accumulate the stock from levels, and current levels is 144.70. So long-term investors, positional investors, swing traders can buy the stock in the range of 144.70 and on dips to 140 for an upside target of 170 in long run. And definitely for short term, those who wants to take a swing trade can buy the stock for an upside target of 158 from the current levels. So definitely this stock should be added in our portfolio. I mean to say the investors portfolio, and one should not uh, leave this stock because already the stock has corrected more than 50%, and now it's time for stock to at least give a pullback rally from these levels. So as again I would like to say, one should buy for long term in the range of 144.70 to 140 for an upside target of 170, which is its 200 moving average in long run. So thank you very much, friends, for watching the show. Any suggestion you can give in the box, and have a nice trading week. Thank you.